as I shared on the daily financial news this morning, I am wearing my epic swing and a miss shirt because I believe the Fed made a mistake. I said yesterday that I hope the Fed would make the threat of raising rates possible. They did not. I thought they would go to 2 rate cuts in 2024. They did not. Pretty much nothing they did. They were far more dovish than I wanted them to be. Again, I don't think rate hikes are coming, but they should have had the threat. And wow, I was wrong. So I'm wearing the shirt out of just sheer acknowledgement for being wrong. Jonathan, how are you?
I'm well. How are you?
I'm doing great. I was wrong, so I love wearing shirts when I'm wrong. I have a nailed it shirt when I'm right, and I will wear the swing and a miss when I'm wrong. But what did you think going in to the Fed day, and then how did it all transpire 24 hours later?
Yeah, no, I mean, I'm honestly not surprised. I didn't have the like the guts that you have to constantly stake your flag in the ground and say what you think is going to happen. But I mean, if anybody's been listening to me for the last few months, I mean, they know that I'm really skeptical of the whole idea that the Fed is going to cut rates anytime soon, and they didn't. So I'm not surprised by that. Um, And frankly, I mean, I'm kind of the view that they should continue to raise rates. I'm not sure that they've even really raised enough, but I think they're probably trying to thread this line between
Mm.
they're really worried about causing an actual recession by raising too much, but at the
Yeah.
same time they're trying to I'm just thinking out loud here, and maybe this is what's going on, but you know, they keep on like sort of hinting at rate cuts, right? And I, it just occurred to me now why maybe they're doing that, right? Because I think
Okay.
they kind of want to keep the economy going in spite of in spite of higher rates. They, even though I think they should probably raise rates more, they're worried about causing an actual recession. But they also sort of want to tease like these possible lower rates later on to kind of keep the animal spirits going. So they're kind of threading this really, really narrow line where they're trying to kind of like make everybody happy, right? It's
Yeah.
like the doves and the hawks, like they're trying to throw a little bit of meat to everybody so that everybody basically
Yeah.
thinks what they want to
The,
happen is going to happen, right?
yeah. I'm not in the camp that they need to go higher, but I am in the camp. I'm like both feet in the camp of they should have the threat of going higher.
Yeah.
And we have 2 quarters, 2 dot plots. So yesterday and December, where not a single Fed president said rates are going higher. I think that is the I think that is the crux of my problem. They're basically saying we're terminal rates. We're comfortable staying here. I mean, there wasn't even one person that said we might have to go higher. We just had GDP print at 4.9. We've got inflation, 5 readings on inflation higher than before. And I'm like, you freaking people don't. And of course, the market's like, oh, 3 rate cuts coming. Let's rip again. I'm
Yeah.
like, my
Well, but
God,
did
this was a mistake.
but didn't Powell, I thought Powell had said, I mean, he's not quite getting like cryptic the way that Greenspan used to be,
True.
but
Saying lots of things and nothing at the same time.
yeah, yeah, but I think, I mean, he talked about like, well, every meeting is a live meeting, and
True. And I
and
believe that. I
and
believe
we
that.
could and if something happens, we don't need to wait for a meeting to raise
True.
rate and do it in the interim. So I think that was potentially his way of trying to signal without being too obvious about it that the Fed would hike if they need to, but they didn't come
Yeah.
out and say it explicitly. He just tried to sort of intimate that they would do that.
Yeah.
I,
I
I,
did see one thing on the dot plot that was a little bit encouraging. And I'm reaching at this point because yesterday was a gigantic mistake, in my opinion. There were 2 Fed presidents that said no rate cuts for 2024, but there was one of them that said no rate cuts for 2025.
yeah,
I was like, wow, that's like 30 months of no rate cuts. That 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 was like the one thing I looked at was like, okay, at least somebody has the guts to be different, right? One of the reasons, these 18 smart people come together and all their PhDs behind them is they should have their own opinion and not be tugged and pulled, to some kind of middle ground. So we had one person stand out very different.
Yeah, and what I think that's telling. I think it's very telling. If you've got one person who is saying no rate cuts at all next year and two saying no rate cuts at all this year, I think that's kind of like the between the lines
Could be.
thinking people need to be looking at, you know, because uh, that's a change from before, right?
Yes. Yes, it
So
is.
so it's kind of like you look at the directionality of things rather than, it's sort of like looking at the trend rather than looking at
Correct.
the kind of the point in time where you are. And that could be the trend that's kind of worth noticing. Like that,
Yeah.
we've got all this noise from everybody, but the fact that a couple of the Fed presidents are saying, maybe we're going to be here for a while,
Mhm.
is telling,
Yeah.
so.
That's the only thing I took from it. I mean, the other things that they said in the dot plot is GDP is going to be higher than they expected, inflation is going to be higher than they expected, and the job market will be stronger than they expected. That's like all three good things, and they're not, and they're still not, they're still talking three rate cuts. I'm like, what are you guys doing? I mean, I just didn't get it.
I mean, listen, I think frankly, they should be talking about how rather than thinking that rather than saying the economy does or doesn't need a rate hike, they should be talking about the economy being able to absorb a rate hike, right? I mean, because
Something they got it. They got to
people,
pull this animal spirits back.
yeah,
These animal spirits that they once they get going, they can become a problem.
yeah, but I mean, not just that. I think that they should, if they're really trying to kind of thread this needle and set and try to make everybody happy at once and keep the economy going in spite of rate, hikes. I think that they should be talking about the fact that, look, you know, having having a good risk-free rate of return is good for everybody, right?
Agreed. Yeah,
And
I
and
agree.
it's good for savers. It encourages saving. That's something that we want to encourage. The for a long time, savers have gotten screwed, and the economy
True.
is doing so well that it can actually absorb. We rates should be higher, and the economy can absorb it without sputtering into a recession, right? And they could talk about that without actually doing it, right?
Mhm.
And
That is exactly what I thought should have happened yesterday. They
but
just
but
need the threat.
yeah,
They
but I'm
didn't
saying
talk about
without threatening though. I'm talking about this is a little bit of like a semantics issue, but like
it. Okay.
rather than sort of threatening a rate cut, kind of like forecasting it as something that is good for the
Mhm.
economy.
Right. This is how you position it. Like, hey, we're here at 5.25, 5.5. The market, the economy is doing well. It's so strong it could take another one. I
Yeah,
get it. Yeah.
yeah.
Well, just to totally left turn on you. I don't know if you saw what happened today in Switzerland. Did you see that surprise move in Switzerland?
Do they raise their rates?
They cut rates.
They cut rates, really? No.
First major economy to cut rates. And oh, by the way, it was 1.75. Now it's 1.5. So
Wow.
their Fed funds equivalent, first major economy to cut.
Because didn't Korea just raise rates today in a surprise?
I didn't see Korea. Japan
Taiwan,
did.
Taiwan. No, Japan did yesterday. Taiwan did. I think it was Taiwan that
I
did
don't know. I
today.
didn't see it, but yeah, first one to cut. I'm like, oh my god, the rate cutting has started.
Well, but it's weird. It's going in two different directions at once, though, because the BOJ raised it and now
Yep.
Taiwan raised it. But
Well,
then,
Japan was negative for 17 years. It was about
yeah.
time they got over zero.
Well, seriously, it's good for them too, right? I
Yeah.
mean, it's good. It's a good sign for them. But it's just interesting to see how things are going differently in
Yeah.
different places, right? So, um, the the I didn't know about the Swiss, but I mean, I wonder what's.
Yeah, they're claiming victory pretty clearly. They've had inflation below 2% for the last several months, and in a surprise move, nobody saw it coming. They cut rates to this morning. They cut
I
early
guess
morning our time.
this is what I just don't understand though. Like, if they've defeated inflation, but they're not in a recession, like why not just leave rates where they are? Like why lower them? What
That's
I don't get it.
exactly because so there's a couple of answers.
Yeah.
One, as a economist, which I am, who studied the markets, there's a book smart answer, and then I think there's real life. The book smart answer is one of the things the Fed or central banks have always tried to do is maintain restrictiveness. And if you have inflation falling without the funds rate falling, you can get more restrictive,
Right.
which is not what you want. So you try to continually threat. That's the book smart answer. the real life answer is I have no idea why you would cut if you have GDP growing and inflation falling and everything's working. It's
Yeah.
just it's odd.
I mean, because that's the thing is like so there's kind of like a mechanical textbook idea.
Correct.
Well, this X spread is too restrictive, right? But then
Correct.
the real world is like, well, it's obviously not too restrictive
It's
because
too restrictive. Yeah.
it's not too restrictive. If the economy is growing and inflation is falling, it's not too restrictive, right? It's by definition. So it's kind
Yeah.
of
The one thing that I'm thinking about, I don't know if you saw this. I wish I remembered the company that did this research, but they went out and evaluated 4,000 banks. And I talked about it, I think, on Wednesday of this week in the Daily Financial News. Only 232 of them, so I don't know what that is, a couple of percent, were flagged as risky, meaning they had unrealized losses and they
yeah,
were over indexed on commercial real estate. And only one big one. And it actually was New York Bank Corp who just got a 1.1 billion from Steve Mnuchin. But all the others were kind of smaller. And what I was thinking that the Fed might be doing behind the scenes is buying time for banks to clean up their act. That's what
yeah,
I think is happening. They're getting all this insight from banks. They remember what happened to Silicon Valley Bank when all the treasuries went, bad. And that's what I think is happening. Is they don't want rates to go higher to make the banking problem worse.
right,
That's the only thing I could think of is why they're doing what they're doing. Because the economy clearly can handle the rates.
right. So it's just letting the banks kind of grow out of their problem, like
Yes.
giving
So
them
not and not make it worse, right?
right,
Because at some
right,
point when it breaks, there's nothing you
right,
could do.
right.
Yeah.
I mean, look from the bank's perspective too. I mean, somebody posted something interesting about banking the other day on LinkedIn, and they were talking about why banks would be willing to take a haircut on a loan,
Mhm.
and and really the idea is because they want to redeploy the capital, right?
Correct. Mhm.
And they don't want to have it tied up in a non-performing loan. They don't want the
Yeah.
property.
It's more expensive for them to manage. They got to do all this extra headcount. Yeah.
Right. So they're willing to take a haircut on a short sale
Mhm.
uh, in order to redeploy the capital. And now that interest rates are higher, they can make more money,
Yeah.
right?
Yeah.
So that could be something that the Fed is thinking about too, kind of give them an opportunity to start rolling some of these loans,
Yeah.
right? And
I
then deploying the capital at higher interest rates where they're going to improve their balance sheets and
I
profitability
got
that way.
something for you. I don't know if this is you've heard this, but I just had a bank yesterday. One of the banks that owns has the note. It's a community bank in
Mm.
my market who has one of my apartment loans and has had it for a decade. They sent me a note yesterday, Olivia and I, a note that says, "Hey, we want to offer you a below market interest rate, do a rate and term refi, basically no paperwork. Your payment, we'll give you below market rate, but your payment, because we're going to do rate and term, will drop about $1,200. And all you have to do to get this is move 10% of your loan balance to our bank."
Huh. I have not heard that before. That's interesting.
Yep. So again,
Deposits. So they're willing to, if you give them the deposits, they're
mhm,
going to give
they're
you
going to give me a below market rate and do a rate and term. Obviously, we're going from, I don't know, 20 years left back to 30, which is part of the reason, the payment will go down so much. But I thought that was really interesting. I was
yeah,
like, okay. So again, banks are trying to raise capital. And one of
yeah,
the ways they can do that is to take their, um, loan holders who they trust. Obviously, we've had a great relationship. I meet them every year in person. And they're like, hey, we want to offer you a sweetheart deal. And oh, by the way, you currently don't have any deposits with us.
right.
Give us 10% of your loan. We'll do this for you. It's going to be like I think it was like a $3,000 all-in refi with paperwork. I'm like, all right, you want to help me save $1,800 a month and it costs me three? Okay, I can do that. 2-month payback, done.
I mean, it's funny, what I've discovered doing these hotel deals is banks, like when you come and tell them like, hey, I want to put $1 million of, our renovation funds into your bank, they get like real nice real fast, right? I mean, like it's just, it's really funny how
This
that
is funny
works.
how it works. Yeah.
You
Yeah.
know,
So it's this commercial thing is interesting. I think this, I mean, again, it happened to us yesterday. I'm guessing they're being very selective, likely with who they give that to. But this is what I think happened: is banks take time to clean up,
Right.
their balance sheet.
So I did have a really good interview on my podcast a couple months ago with a guy who had started his own bank, right? And he come to
Oh
the
wow.
banking business, and he actually, one of the very few people to charter a new bank. It's I don't know if you know this, but it's become increasingly difficult to charter new banks. And not only do you have like the big banks buying the smaller banks, but it's harder. It's harder than it's ever been before to start a new bank, which is why we've got so much banking consolidation because the old ones are getting bought up and there's no new ones being formed. But he actually formed a new bank. So we had an interesting discussion on the podcast about banking, and he was saying that that sort of one of the things that's going that right in this kind of environment, what banks need to do is shore up their balance sheets, and the way they do that is by taking in deposits and not making loans, right?
Correct.
So that's a lot of what's going on right now. Obviously, it's not happening enough to be causing the economy to slow down, but that's kind of on individual bank levels. That's what a
Hmm.
lot is happening is they're just not lending money out, which is why you see kind of commercial real estate having this big kind of hiccup at the moment
Yeah.
because yeah, you just
Yeah.
and
On the commercial front, are we still early? Are deals still not getting done? It's still.
it's deal flow is still way down. There's still uh, you know the disconnect between sellers still have their old expectations and
Mm.
buyers just can't afford to pay them. I mean, there has been some anecdotal evidence about the few deals that are coming to market that look decent are getting overbid
Mm.
because there's a lot of capital out there that wants to be in deals and there's not a lot of deals happening. So the few that are some that are coming to market, I do know of other deals that have come to market and haven't gotten the activity that they wanted, so they were pulled off the market. But just in general, deal flow is way down. What I am seeing though is a little bit of loosening up on the hotel space though. I think there's some more stuff starting to come to market now. And I think frankly it's because people were waiting before to see which way the wind was blowing, and now they realize like so. I think there is some capitulation starting,
Okay.
especially with the mom and pops who just for lifestyle and time of
Yeah.
life reasons want to move on.
Yeah.
Um,
It's
but
funny. One of my guests on Wednesday, Bo Eckstein, he does small business loans.
yeah,
And obviously hotels, boutique hotels can play a big part in that. And he just did a show about the greatest transfer of wealth. And he's hearing more and more baby boomers across all small businesses. It's just they're done,
oh
right?
yeah,
They're done, right? I think he said 10,000 people turn 65 a day, something like that. And about 8 or 9% of them own small businesses. Some of those obviously being boutique hotels. I think baby boomers are ready to enjoy the next 20 years, and that's not being an operator. So it
oh
makes
yeah.
sense.
They're ready to retire, and their kids don't. This is see. I don't know. We may have talked about this at some point. I don't really remember. People ask me sort of why is it that I I've started looking at hotels with the interest that I have. And a a big reason is like in the multifamily space for really any properties that are of a decent size, sort of big enough to syndicate, the mom and pop owners are largely gone. Like the
Yes.
last
Yeah.
cycle really like they pretty much sold out. I mean, there's
Hmm.
obviously some left, but by and large, like when I started back in 2011, pretty much everybody that I would buy from
Yeah.
were either they were mom and pops or they were rehabbers that bought from
What
mom and
what was the smallest deal you did when you were building your portfolio?
52 units.
Okay.
54, 54. Yeah.
All right.
And but back in the day, like people who owned 100 units were mom and pops, right? Because if you think about back when those buyers bought those properties, you know, they were buying 100 units for 10,000 a door,
Right.
they paid $1 million for it. And somebody who was reasonably affluent in some of these towns could could buy those, right? Um, most of those owners have sold out because
Right.
they were
Yeah.
buying it at 10,000 a door and they were selling it 150,000 a door. And like, you know, the market has kind of sucked all that out.
All
Right?
that inventory. Yeah. It's already turned.
It's all been syndicated. It's all with professional companies now.
Mm.
That hasn't happened yet in the independent hotel space.
Right.
And
I think you're right. Yeah.
and we're just starting to see that now, where a lot of these baby boomers, and frankly, even people who are older, are are starting. They're like, okay, we want to retire. We've done this. It's time to move on. And the kids don't want these assets, and they need a lot of capex, right? And they're a little bit heavier lift than the the multifamily stuff. So there's a kind of a thin pool of buyers for these assets. So from my perspective, it's like, wow, there's a lot of potential value here
Mhm.
because I can buy from mom and pops who haven't run these properties. They haven't
Yeah.
maximized
They haven't upgraded them. They're just, yeah, they're sucking the cash flow. They're not putting in capital.
yeah,
Yeah.
they're basically milking the properties, and you do that long enough, and you have a property that's hard to sell and
Yep.
impossible to finance.
You
So
got it. Yep.
so here we are in a situation where like I can either do it for cash or convince them that they need to do seller financing.
Mhm.
And there's just a lot of, for me, there's a lot of meat on the bone, which is why I
I,
like it. So,
no, I agree.
uh,
Yeah. So there's a lot going on. Again, I think the Fed made a gigantic error. We'll see momentarily. I do think there's a lot of opportunity in the boutique hotel space. I'm really glad that you're passionate about that. Where can people follow you and see what you have going on in your world?
yeah, really the best these days. I'm really largely kind of switched over to LinkedIn from Facebook. I found that LinkedIn is a great place for in-depth conversations about real
Mhm.
estate that Facebook kind of no longer is. So come follow me on LinkedIn, and drop if you want to connect with me, drop me a note saying you're from this channel, and I'm happy to connect.
Yep. Tell him he came from one rental at a time, so he keeps coming back talking to you every Thursday. Jonathan, you're amazing. Thank you.
Thanks, Mike.